Hi everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for Atom, which is the native token of the Cosmos blockchain. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we post regular updates about our risk indicators and more. So if you've been following this channel, you're probably familiar with these types of graphs. So quickly, what I'm showing you here is the price of Atom across time. So the price here is on the y-axis, it's in the logarithmic form, and then here we have dates across time, and each dot represents a day, and each dot is color-coded based on the output of our risk indicator, which is called the upside-downside potential indicator, or UDPI. And the way this model works is it ranges from 5 to -5. A score of 5 or closer to 5 means high risk. It means that the downside potential is far greater than the upside potential at that moment. And a score of -5 would be a low risk score. That would be when the upside potential is far outweighing the downside potential for that asset at that point in time. So what you can see is throughout Atom's history, the UDPI has done a pretty great job at calling out these high risk zones, these points where Atom had really tapped out its upside potential and really didn't have much further that it could rise, and actually here as well as points where Atom has been quite low risk, these points where where its downside potential was minimal and its upside potential was substantially greater. And what you'll see is that if one had followed this model and had bought in at these low risk zones and sold off at these high risk zones, one would have done quite well. One would have really maximized their return on investment for Atom during those periods. Now, something that I think is useful to mention about the UDPI is that it's a smart model. And what I mean by that is it learns from the asset's history, and it also learns about the asset's current behavior, and then it forms its estimates of risk based on that knowledge. And so you can kind of see this play out on the chart. So let's take, for example, the spring run, or excuse me, the run from December of 2020 up through the spring of 2021. What you'll see is that back in December, the UDPI was saying it was a relatively low risk zone. You know, it was somewhere down here around -1. And so that it was saying, you know, it's not, the risk reward ratio is in your favor at this point. If one had bought Atom at this point, they could expect there to be more potential upside than potential downside at that moment. And then sure enough, going into February, we had this massive run that Atom put in, where it went from around $5 all the way up to $25, $26. So it did a 5x move around about there in that time. And then the model was able to identify that once we got up to that 25, 26 range, that the upside potential was pretty much tapped out, that Atom had basically tapped out its upside potential, and it wasn't likely to move much higher in the future, or at least in the near future. And sure enough, that's what happened. We got this correction off of 25, 26, kind of down here into the high to mid teens. And then as time went on, as we kind of built up support in this range, the UDPI learned from that and it said, okay, you know, maybe Atom now has a little bit more upside potential it could potentially start realizing, and so it starts moving off of that deep red. And sure enough, we got a little bit more move into the upside. Although then what ended up happening was that in May we got that crash kind of across the crypto market. And so at this point in time, what the model was saying was that the downside potential still outweighed the upside potential. You know, it still had more room to move to the downside than upside. But you know, in another universe where Bitcoin didn't crash in May, where things had gone different, the model is suggesting that Atom actually did have room, that it could have potentially moved up again from here had the market conditions been different. Of course, instead, we realized that kind of greater downside potential, so it's still identifying there being greater downside potential than up, and that's when we went down into the summer, this kind of mini bear market. And actually, the UDPI here identified the summer as being a historically great time to be buying Atom. It's when the downside potential had really been tapped out, you know, deep green here. It's really saying we're unlikely to go much further. It's much more likely that we're going to start realizing some of that upside potential. And then sure enough, out of the summer through August and September, we ended up doing another 5x with Atom. Atom went from about $8, $9 up to around $44, $45. It's another 5x move from here to here. And then again, it identified that that move into September was not likely to sustain much further than it went. The upside potential had kind of gotten tapped out again. And then sure enough, we've had a bit of a correction off of there, and now we're kind of consolidating again. Now, just today, Atom's actually been showing quite a bit of strength. We've had about a 17% move, somewhere around there. We're kind of up here a little over $40 as I record this. So it'll be interesting to see what Atom does from here. You know, the model's suggesting it still has some upside potential to go. You know, it's not in deep red territory anymore. We could see it break above this high that it put in September, or it might do what it did back here, where it's going to kind of hang out for a while. It's going to kind of consolidate a bit before it pushes up further. And so one thing that you can look at is that other crypto assets, things like Solana, have actually pumped a few days earlier than today. And what ended up happening to them is they kind of got rejected off their previous high. So it'll be interesting to see if Atom kind of gets rejected from that zone as well, or if it's able to push on further. And the UDPI suggests that it could go either way. You know, there still is upside potential for it to realize if it moves now. So it'll be interesting to watch it and see what it ends up doing over the next few weeks. So to talk a little bit more about what Atom's doing right now, I want to show a different graph. And this graph shows just the raw output from the model across time. So now I'm plotting on the y-axis the UDPI output. So again, 5 high risk, -5 low risk. And then the line here is just the output of the model across time. And the color coding just corresponds to the level of the UDPI. So darker red means, you know, higher risk. And so what you can see is, again, that the UDPI really kind of tends to bottom out at those low risk zones that we had seen before in Atom's price history, and then really shoots up, kind of spikes up to this kind of 4 to 5 range here when things have gotten really overheated, when the upside potential seems to be mostly tapped out. And so in February, we got up to those levels. We kind of came back down here where the downside potential was still outweighing the upside, but there still was upside potential that could have been potentially realized had market conditions been different. But, you know, instead the crypto market had that crash in the summer, and then the UDPI actually identified the summer as being the historically best time to buy Atom before it moved up. And currently we're sitting right here at a little bit over 1. It's hard to see with this line, but we've ticked the UDPI has actually kind of reversed a little bit right here, and that's to take into account this pump we just saw today, where, you know, we just pumped 17%, and so now the model is suggesting that the upside potential isn't necessarily increasing at that point. You know, it's basically Atom's realizing some of that upside potential it still has here. So it'll be interesting to see if Atom keeps on pumping, keeps on realizing that upside potential, and that might end up making the indicator go back up into these risky zones, in which case I would expect that Atom's kind of played out its move for the time being, or we might kind of hang around, consolidate, in which case either the risk indicator will stay here, or it might actually start dropping if it thinks that the upside potential of Atom is increasing the longer it hangs out at these price ranges. So one of the other thing I wanted to mention with this graph is, and this kind of is something I wanted to just note about the different risk indicators that we have. And so if you're new to the channel, you can go and look at some of our other videos where we put out risk indicators for a bunch of other crypto assets. You know, big ones like Bitcoin, Ethereum. We also have ones for ADA, XRP, Polkadot. We have a bunch of different indicators we've been working on. Chainlink. And one thing I think is notable about all of those indicators we put out, and you can see it if you go back and look at those videos, is that almost to a T, almost to every single indicator, they've, by and large, almost all of them identified the summer as being either a fantastic time to buy, or potentially even the best time, the lowest risk time to be investing in a given asset in that asset's history. And I think that's something that's worth noting, because if you were around in the crypto market back in the summer, you'll remember that it was an incredibly fearful time. You know, we just had this high, these tops that we had in the spring. A lot of people were expecting us to be going into a long, protracted bear market at that point. We had this big correction. You know, people were saying Bitcoin was going down to 10K. People were saying that altcoins were going to crash even further. It was going to be a bloodbath. But if one had been following the UDPI, and not just for Atom, but for a bunch of the different assets that we have UDPIs for, one would have been able to see that that's just wasn't very likely. And when people were saying that we're going to drop further, is going to be a bloodbath, the UDPI was saying that's not likely. You know, it was saying that our downside potential had been pretty much exhausted, and it wasn't likely we were going to drop much further. We were much more likely to start realizing some upside potential in the near future. And then sure enough, that happened. We ended up seeing that happen in August through September. For Atom, we did a 5x coming out of there. And so really this was what the summer was a historically great time to be buying a ton of different assets, and the UDPIs for those different assets was reflecting that. It was flashing these deep green, these low risk zones. And so that's really one of the things I think is useful about having a tool like the UDPI is it lets you cut through all that noise, cut through all that emotion and that fear, and just see what is the data actually telling us. And at the time, the data was telling us that we shouldn't have been afraid. We should have been happy. We should have been going all in at that point. We should have been really investing in the market at that point because there was so much more upside potential to realize than downside potential at that moment. And so that's what I really find useful about these tools is that they give you a data-driven indicator that will tell you how fearful should I actually be at this time, how risky are things, is it the time to be selling, is it time to be buying? That's what this model helps do. So of course, none of this is financial advice, do your own research, make your own decisions, but I think the UDPI gives some pretty interesting information about the current state of different assets. So just to talk a little bit more about where Atom is, so as I mentioned, it's sitting a bit above 1, so it's at 1.38 currently as I record this. And so what that suggests is that the downside potential of Atom does outweigh its upside potential, but it's not super extreme. Atom still does have a decent amount of upside potential. It could realize if it decides to run right now. And so that's what will be interesting to see is, does Atom end up running further, breaking its high that it put in September? And if so, the UDPI says that that's definitely possible. It has upside potential left in it. It could absolutely do that. Or it might not. It might get rejected off of that previous high, and it might need to consolidate a little bit longer. But regardless, what the UDPI is suggesting right now is that Atom might be still in a little bit of an overheated point. That it's not, the risk-reward ratio isn't totally in your favor at this point for Atom. So one thing that's really useful is, that's useful just for Atom to think about that. But one of the main benefits of having these types of models is not just to have it for individual assets, but to have UDPIs for multiple assets that you can compare to each other. So I'm showing you here is the current level for ADA as I'm recording this. So ADA Cardano being another crypto asset that's pretty popular. And what you'll notice is that the UDPI for ADA right now is actually showing a very different picture than for Atom. It's actually suggesting that for ADA, the upside potential is currently outweighing the downside potential. And so, of course, that doesn't mean that ADA necessarily has to go on a big run immediately to realize that upside potential. But it does just suggest that at this given point in time, there's more room for ADA to move to the upside than there is for it to move to the downside. And so if one's considering the risk-reward proposition of an investment right now, ADA is looking potentially more favorable than Atom. There might be more room for it to increase than to fall, and so you might expect to get a little bit better of a risk-reward ratio for that investment. Now again, this is not financial advice. Do your own research before making any decisions of what to invest in. But the usefulness of these UDPIs, especially for multiple assets, is the ability to do these direct comparisons and then decide where your money may be best placed. And so that's another reason why I'd recommend following this channel, going and following our Twitter, because we're going to be doing and have been doing regular updates about our UDPI levels. So on Twitter every day we're giving updates about the levels across all the assets we have UDPIs for. And on YouTube we're doing these updates with more deeper dives into these risk indexes and what they suggest. What are the risk indicators for different assets suggesting at that point in time. Alright, if you liked the video, remember to give the video a like, subscribe to the channel, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.